Good day everyone, my name is Tochi and I'm here with this video to teach you my top 3 candlestick patterns which I like trading. At the end of this video you'll be able to understand why I trade them and you gain so much value. And also I would like to pause down here and say that this is no way a financial advice. So anything you learn on this channel, on this particular video, I will advise that you go to your demo trading account and practice it over and over. And if you see that the winning ratio is on point and you love it, then you can implement it on your real life account. So with that said, I would like to jump straight up into the business of today because I would like to take so much of your time. Okay, this is my chart. I'm sharing my chart. As you can see, no single indicator on the side on the chart, no single indicator. I'm not making use of any indicators. Now I'm going to say that this is a free account, so I'm not using a pro account and I'm not doing anything too much more that way. Now I would like you all to pay good attention to the details which I'm going to be passing across shortly. Now let's start with our first candlestick patterns. But before I go through the candlestick patterns, I'm going to tell you that this which I'm about to show to you works on all trading styles, on all strategies. So if you have your personal strategy and it's not really winning for you, then you might be doing something wrong. You can implement this to your strategy. Then if it works for you, fine. You understand me? Then if it works for you, fine. So I'm going to show you, dive into the event of today. Sorry, I'm having a bit of a flu, but I think I need to make this video. So if you can see my my notepad, my top 3 candlestick patterns which I like trading in Forex. The first one I will call the engulfing candles. Now the engulfing candles. If you are new to Forex, if I say bullish, it means buy. If I say bearish, it means sell, like the selling market. If I say the bullish market, it's a buy market. If I say the bearish market, then it's a sell market. So with that established, I'm going to be going with the first one, which is the bullish engulfing candlesticks. Bullish engulfing candlesticks. Now, some people might say, does this work on later time frame? Does this work on 15 minutes time frame? Can I use this on H4 time frame, H1 time frame? The time frame I prefer using is H1, which is the 1 hour time frame. Reason being that the H4 time frame, before some of these things might play out, it might go way against you before playing out, so that the pips movement when it goes against you is not really much in the H4 time frame. That's why we step down to H1. Now let me skip H1 and get down to 15 minutes and 30 minutes. Now 15 minutes time frame, when these candlesticks pop out and you're seeing them clearly, they might pop out at the wrong zone or they might pop out too early for you. Now entering might make them go against you sometimes. Now you might struggle to hold the trade before it comes in your favor. Now H1 is like the average between H4 and 30 minutes and 15 minutes. So H1, if it's going against you, it should be a little bit against you. You understand? It's going to be a little bit against you. Then it now plays down on the number of pips you want to be catching. Now, I'm going to say this. I love using this for scalping. I love using this for scalping, meaning that I might not be very focused on looking at my support and resistance, trend line and all that. Now, anytime I see this candlestick pattern playing out, I would like to go in very fast and leave the market very fast. Yep, that's, I hope you understand what I mean. So now I'm going to go into engulfing candlestick patterns. Now, the engulfing candlestick patterns is two, which we all know, bullish engulfing and bearish engulfing. Let me put it down there so that engulfing candlestick patterns is two. We have the bullish engulfing and we have the bearish engulfing. Like I said, bullish meaning buys and bearish meaning sells. Okay, these two. Now, most times when you see a bullish engulfing candlestick pattern at the support zone, that is at bottom, then you know that we are aiming for a buy. When you see it at the support zone, then you know that we are aiming for a buy. When you see a bearish engulfing candlestick pattern at the resistance, then you know we are aiming for a sell. Now, let me show you the image. I think, okay. Now, I hope we can say this. This is a clear version of bearish engulfing candlestick pattern. How do we know that? Now, candlestick pattern, either engulfing, what we call engulfing, it means the candle before the one we are about to talk about is bigger in body size. Now, this is what I mean. This is a bullish candle, which is in this color. Now, the bearish comes in. Now, the bearish is bigger than the bullish. This is an engulfing. And why do we call it an engulfing? Because it's engulfing this one. It's engulfing this. That means it's bigger than the previous one. Now, this is a bearish engulfing pattern. So, if this appears, I can either take a straight up sell, or I'll wait for it to retrace up to the middle of this candle before I take a sell. Any of that is okay. Any of that is okay. So, when I was talking about it going against you, I mean, when the candle keeps buying, after it appears this way, but the candle keeps buying and it gets to the top. You know, when it gets to the top here and you're selling from here, it gets to the top here, which means you're in negative. So you might decide to hold and take another position when it's above. Then once it's going to your direction, you're closing both the one in profit and the little one in negative. Now, with that understood, I think let me get down to the next one, because I want to show you a practical example of how I take it also. Now, let's get down to the bullish aspect. Now, this is the bullish engulfing candle. Now, we have the sell candle, but after the sell candle, we have this blue candle coming after this red candle, which means this is a bullish engulfing candle. Bullish meaning that, engulfing meaning that it engulfs this one. It engulfs this one. That means it's bigger than this one. That is why we call this a bullish engulfing. I like this because usually when it occurs at the support zone, before it goes against you, it would have made up to 10 to 20 pips. I limit myself to 10 pips. It would have gone 10 to 20 pips before it goes against you. So capitalizing on that can help you grow accounts. You know, it's just like you spotting it exactly when it wants to start. Then you take in the buy and you're done for it. Now, we have the engulfing candlestick pattern. We have the bullish engulfing, and we have the bearish engulfing. Sorry. I have the bearish engulfing. Now, I want to assume this is clear. Now, there are zones whereby you don't want to obey bullish engulfing or you don't want to obey bearish engulfing. Now, I'm going to give a snippet. If you use RSI, which is relative strength index, which shows the oversold and overbought region. When you are oversold, it's pointing at oversold, and you spot a bearish engulfing, oversold, and you spot a bearish engulfing candle, then that is the time to enter for a short buy. You can enter for a long buy if you find the strategy that you're using on point. You can enter for a long buy. But if you don't want to go long in pips, you can just go in for 10 pips short or 15 pips and just get on with it. Now, the next one which I'm going to be talking about now is the railroad track. If there is any point you don't really understand what I'm saying, comment on this video, down on this video, then I'll be able to explain that in details. Next one is the railroad track, and like the railroad track, we always have the like bullish engulfing. We all the engulfing candlestick pattern. We still have bullish railroad track and bearish railroad track. Now, railroad track is as if we are having two candlesticks of the same height. Two candlesticks of the same height. Most times they are not exactly the same height, but sometimes appears as sell, buy of a little bit equal size. So you call that a railroad track. It's an uncommon way of behavior of Forex, but sometimes it plays out well. Every time, okay, no 100% Forex. So let's say sometimes it plays out well. Now let me show you example of railroad track. Now, this is an example of bearish railroad track. Now we are having the bull, and suddenly the bull going up, and suddenly the bear is taking it down immediately. This is an example of a bearish railroad track. Now, this appearing on a support on a resistance, then you can take it down for a sell. Now, most times I like treating it this way. Most times, if this is too long, if the sell is too long, I will allow it to retrace up to 50% of the candlestick. I will allow it to retrace up to the 50%. And once it gets down to the 50%, I take a sell. Or most times, if I still feel like entering in two positions, I take the sell from here. After this candle has appeared, I take the sell from here. And when it retraces, I'll take another sell. That is how I treat this railroad track. And if you have it at the support, the opposite direction, we have a sell and we have a buy immediately. You see that? So these two candles standing, looking a little bit equal in size, then we can say this is a railroad track. Then we can obey by entering a sell or a buy. Now, let me show you another image where we have example of railroad track. Now, another image where we have an example of railroad track is here. We have this is a buy coming up, and suddenly we have a sell. As you can see, like I told you, it's not always looking perfectly like a buy and a sell being equal in size. No, most times it appears that way, and sometimes it doesn't. But the equation between the sell and the buys are going to be looking very, very, very similar. Like this is a bearish railroad track, and after this we have the sell coming in. And this sell, if I'm just aiming at getting just um 10 pips or 15 pips, I should have been out of this market, because this is even a daily market. Now, like I told you before, I would have loved to enter directly out after this, or I'll wait for it to retrace up to the 50% of this candle before I enter for another sale. You understand? Now, next one which we are going to hit again is inside bars. Inside bars. Now, as usual, the inside bar comes with the bullish inside bar and bearish inside bar. Bullish inside bar and bearish inside bar. Now, how does the inside bar candlestick pattern look like? Now, the inside bar candlestick pattern, it's sometimes we call it mother and daughter, which means candlestick pattern. Let's assume this is a candle coming with the wick at the top. Now, an inside bar is, we take this as the mother. Now, the next candle should, both the wicks and the body of the candle should be inside this, which means this. Both the wick and the candle stick body should be inside. That's something that looks closely like this. Now, if it's a bearish inside bar or a bullish inside bar, it depends on this. This is called mother and daughter. That's how we denote it. Mother and daughter, which means the daughter is, every part of the daughter should be inside or should be covered by the mother. If this is a bearish, if this is a red candle, then this should be a blue candle for me to sell. If this is a blue candle, then this should be, if this is a red candle, then this should be a blue candle for me to buy. That is how we take this out. I'm going to show you an example. Okay. Let's start with this. Okay, this is an inside bar. Now, this is a bearish inside bar. This is the mother and this is the daughter. Now, both the wick and the body of the daughter, everything should be inside the mother. This is exactly what we mean by inside bar. Bearish inside bar. If I see this playing out at a resistance, which is at the top, if I see this playing at a resistance, then it's a time for me to enter for a sell. I'll enter for a sell directly, or I want it to get up to the length of the mother before I enter a second position for a sell. This is a good sign for a sell. Now, if I see this at a support zone or a trend line moving upward, then I find this, then I should go for a long position, buy. Now, hitting this for a buy for 10 pips. Now, if it goes against me and it gets to the length of the mother, then I will enter a second position for a buy. So that is how we treat this. Let's go to the next image. Next image now appearing somehow. Some of us might not be able to identify this, but this is a clear sign of our inside bar. Now, if this is a buy, and this is sell. Both the sell wicks and the body, everything is covered up by this. With this, I should be able to sell straight and take up to like 10 pips or 15 pips and go out of the market. 10 or 15 pips, then hit out of the market. Then another example is this. Both the wicks and the body of the daughter is covered by that of the mother. This is a sell and it's a buy. Then with this, I should be value. I hope these three candlesticks are understood. Now, a quick reminder on this. Now, don't take any of these candlesticks anywhere you find them. Trade them along with your system of trading. Also, this is looking like a series, and this is the first one of the series. So if you don't have a particular trading strategy, then make sure you do watch all the series sequentially. After this, making this video now, I'm going to put the link of the next video you should watch after watching this. I'm going to put the link directly under the description of this video. So do yourself good by clicking on the link, then you go through the link and you watch that video, so that you know that after learning this, you're going to the next one. And after that next video, the next video is going to be tagged under the description of that particular video. So with that understood, I think you won't be able to have an issue. But let's get down to showing you on the charts. So we have engulfing candlestick. I'm going to limit myself to 10 pips. I'm going to limit myself to 10 pips. Like I told you, you don't blindly trade this, but because this chart is not marked up, I'm just going to show you where it's played out and all that. So let's start with the first one, engulfing candlestick. Now I'm going to start with the bullish engulfing candle, which is the buys. Bullish engulfing candle. Now let's go on with this. Okay, let me zoom out my charts and look for a nice system. Okay, this is an uptrend. For those first that trade trends, this is an uptrend. So I'm just trying to look for a bullish engulfing candle. No, let me take it back. Okay. Let me take it. Okay. Let's stay here. Now, if we should draw a straight line here, then we will know that this is a good support. We have support number 1, support number 2. Then we have another support. Okay, this is a very good zone to spot our candlestick pattern. So let's zoom out on this. Okay, now on this candlestick, okay, this we cannot take this as a sign, because this is touch number 1, then touch number 2. Although we have a bearish candlestick pattern, but this is too long. Now, down here on the support, I am seeing a bullish engulfing candle and I'm seeing a bearish candle. Now, I am seeing the both of them looking like equal lengths. Now, if they are looking equal in length, then this is a railroad track. Okay, I would have said bullish engulfing, but this is a railroad track. 1, 2. Now I'm going to limit myself to 10 pips, entering the market instantly after they appeared. I can take it 10 pips or 15 pips, like I said. Now I'm going to lay this down. In Forex, what will keep you in this game is patience. Now, each of this candle, because this is a 1 hour time frame, each of this candle, they form and they finish forming after 1 hour. So each 1 hour, I need to be waiting each 1 hour. Now, this candlestick took 1 hour to form. So I'm going to wait for it to finish forming. After I finish forming, now I'm not seeing a good candlestick pattern. Good. Now I allow the next candlestick to form, which means for this to form again, I need to wait for another extra 1 hour. Now I waited for 1 hour. Some of us would like to enter this candlestick pattern, but for me, just because I don't want to get confused and I don't want to be like, okay, let me trade this candlestick pattern, let me trade doji, let me trade morning star, evening star, and all that. No, I keep it simple. 3 candlestick pattern. Let me just keep it simple. Any of this candlestick pattern that comes up, fine, I'm going to take them. Now, if they don't come out and I see other candlestick pattern, for me, I will decide not to take them because this is just my rule. What keeps you in this game is patience rule also. Now, saying this is a railroad track, I take it after waiting for 1 hour, 2 hours, 3 hours, 4 hours. At this 4th hour, it gave me a candlestick pattern which I know. Then from here, I take it 10 pips. That is, after this candle finish forming, after that candlestick finished forming, after 1 hour, when it has closed, it should close. Once it has closed and I saw that, oh, this is a railroad track, then a next one, I can enter for a 10 pips ride. Now, at this point, I would have walked away with my 10 pips or 15 pips and leave the market rolling. So, hitting this over and over again. Now, I'm waiting for them to get out to my resistance line for me to enter another trade. Now, once they go down to the resistance line, look at this. Look at this. This is a very good candlestick pattern for those that trade those type of candlestick pattern. But this is not what I would like to trade. I allow it to slide, go through. Now, as some of us know, after a breakout, there's going to be a retest, then continuation, right? That is breakout, retest, then continuation. Now, I see this breakout. I'm waiting for it to retest, then give me a candlestick confirmation on this line. I need them to retest and give me a candlestick confirmation on this line before I enter the trade. Now, look at this, going down. This is not, I didn't get any reasonable candlestick. Okay, I didn't get a reasonable candlestick pattern here. No, I didn't get. Oh, okay, we have inside bar here. This is an inside bar, but this was broken out, so I wasn't expecting this. No, so this will slide. Another one, no, I didn't get a good candlestick signal here. Breakout again. Waiting for them to retest. Good. Now, they retested here on this line. They retested here, and here I have my railroad track. Bullish railroad track. These 2 candlestick patterns, bullish railroad track. Now, after spotting this, I'll be like, okay, this is a good sign for a 10 pips ride or a 15 pips ride. Now, after this candle appeared 1 hour, I hit it again for a 10 pips. Now, like I told you, most times I wait for it to retrace 50% of this particular bullish candle to enter for a second entry. Now, it gave us the entry here, around here, which would have capitalized on one of it and another extra of it for a 10 pips, right? So you're taking 10 pips from here, you're taking 10 pips from here. In total, you've taken 20 pips off the market. That's very nice. Now, look at this. This is a bullish engulfing candle. But like I told you, I don't take it anywhere. Fine, it played out. Good. It played out, but after going against me for a long time. Now, like I told you, I don't take it anywhere. Even this is a railroad track, I don't take it anywhere. I think it's in compliance with what you're trading. If you're trading support and resistance, fine. If you're trading once you get to the Bollinger Band, let's give you this, good. So those are points where you should be focusing. Okay, let me take this out. Now I'm trying to spot another type of trade I would have loved to. Okay, there is a trade I would have loved to. This is a very good support. Sorry, resistance. This is very good resistance. This is good resistance. So I will be waiting for them to give me a sign on this resistance line. Okay, good. Let's see this. A sign on this resistance line. Okay. This is a clear option for a very good inside bar. Good. Nice one. We don't always show this is a bullish candle and this is a bearish candle. Now, let's come with this. This is a bullish candle and this is a bearish candle. So, this is a bearish inside bar. But right here, we have another option which is going to be very, very clear down here. This is a bearish inside bar, but when this came out, fine. I have two options to trade this. Which means I can either enter for a direct sell down here, which didn't play out well. A direct sell down here. One. And number two, like I always say, I'll wait for it to come up to this point before I enter again. I'll wait for it to come up a bit before I enter. Now, it got down to this point, which is this. Like I told you, this is the first entry. Okay. Good. This is the first entry. But from here, it started going up. Now, there is my second entry. My second entry is above this line. Above this line. Which is the second one. This is an inside bar. I told you this is an inside bar. Now, on this zone, what played out on this zone? I'm looking for 10 pips, but right now, they went way against me. Up to like 50 pips. 56, up to 60 pips. And on my second position, which is this one, my second position sell, they still went against 35 pips. So 35 by 6 pips. That will be very much. So if you have a very good account, you would have scaled through this, because at a later time, when they started showing other candlestick patterns like this, bearish engulfing, good one, bearish engulfing, you would have sold again. And this is a bullish, a bearish inside bar. This one, this is a bearish inside bar. This is another time for me to sell. Even if I had to close this because it was going against me, this was a very good time again to sell. Now, if you have capitalized on this sell, then if you're taking 10 pips or you're taking it down to where you took the trade from, then it should be giving you up to here 29 pips, and down from your first entry 48 pips. Simple and clean. So this plays out well, but except you're very certain of what you're doing. If you're certain of what you're doing, then fine, cool. But when you're not certain of what you're doing, then you just know that you're gambling. Sorry. You just know that you're gambling. Now, number two, still on this line, I'm going to show you a principle how we trade this. But in the fourth series of this, I will show you how to trade this. Very simple. Now, you look at this candlestick pattern. here, bullish engulfing. Sorry, let me make this a bit clearer. We have this blue. We have this blue, and we have this red down here. Now, this blue is small, a little bit small. Then this red is an engulfing this blue. Taking this trade from here and looking for 10 pips is nice. You would have picked it, and the 10 pips would have been very silent without it stressing you out. Like I said, I still also enter 50% of the candlestick pattern, 50% of the candlestick pattern. So on this trade, I would have been 2 entries, which is from here and from here also. Down here, I would have claimed my price, then walk out of the chart. Then I think I've showed inside bar, I've showed railroad track, I've showed engulfing candlestick patterns. So if you know you trade oversold and overbought, you can also still concentrate on these candlestick patterns. Anytime they appear, if they are going against you and the candlestick appears again, take that for a second trade. That's why I advise people that when you're coming to the Forex market, don't come with so little capital. Some people are asking me, can I trade Forex market with $50? Fine, you can trade Forex market with $50, but you need a lot of skill, and also Forex is garbage in, garbage out. When you come in with little knowledge and you come with reasonable funds, you blow the funds. When you come with much knowledge and little funds, you know this thing, but just because you're coming in with little funds and a particular trade, because Forex does what you want to do. Even if you're the best Forex markup tutor, you can mark up anyhow. You can mark up the best markup. After this markup, Forex needs to do what they need to do. Like this is a very perfect zone for a support, for a resistance, because you have the touch number 1, touch number 2, touch number 3. Now this is a very good zone, but Forex still went up to do what it needs to do. They still had to go up and take you down to this long run, back to that line again, and down to this long run, and all that. See, this is how Forex behaves. You can be the best markup tutor, but without being disciplined on what you do, Forex can decide to behave anyhow it wants to behave. But you need to be conscious of those candlestick patterns I told you, and when you are aiming at them, you'll be able to hit them right. Now, like I told you, it's a series. It's a series of which I'm making. So this is the first of the series. Watch them sequentially. Even if you're a newbie and you've gone past what is pips, how to calculate pips, pips value and all that, then this can help you create a reasonable and good strategy for it to grow your account size. Now, there are some questions I know that some people want to ask. You can comment under the comment section and I will do good to answer them. Like I would say, I still remember my humble self touching. And okay, if there's anything you want to ask, you can ask. And also, I think I will drop down my channel where I give free signals down here. I give free signals till when they are not free. But for now, when I'm making this video, like I have a channel which is I drop free signals for those that want to pick them, those that are good to pick them, and the channel link is going to be under the description of this video also. So thank you all for watching. Do me good to subscribe to my channel to get when I drop those series and I drop some other charts, you'll be able to get them. Thank you all for watching. My name is Siemens Tochi. Bye bye. Stay blessed. I may the peeps follow you.